So here's example number 3. Now this is a very informative example. It's going to help you a lot. So as you can see, I'm looking at the price section after at 9:15 a.m. right? And I will mark out the low of the day and the high of the day and the midnight open, just for, you know, for my own information. So the open is 11334. So this is the open, right? You don't have to mark out these midnight opens. It just tells you from where you should start looking for the high and the low. You should only start looking for high and low after 12 a.m. okay? And so as you can see right now, we have a this liquidity level, and then we have the high, which is a liquidity level. And if you think, you can see these two relatively equal lows, right? Highs, sorry. These are relatively equal highs. So you can actually drop down to the 5-minute time frame, okay? And if it's not clear, you can also drop down to the 1-minute time frame. And now you can see that we have a clear equal highs zone. You can see we have a tap, and then we have a tap, and we are going down. And the time is 9:19 a.m. Now this is a clear, and I mean clear, liquidity zone, okay? As I have taught above, you can see these are clear relative equal lows, equal highs, my bad, and they are not the best, but they are, okay? So you gotta wait for price to sweep that level, and as you can see, price swept this level, and it also swept the low of the day. So what you should be looking for here is a market structure shift, but it doesn't happen. Now what you can do, since the imbalance was so big, you can take your entry from the auto block level, okay? There was no market structure shift, and we went straight into the auto block. So as you can see, our daily bias, the market structure, the overall market structure was bearish, and we are only taking short positions. We would not take long. The previous example that I showed, we should have not taken the long because the market structure was bearish, but it still works. But I'm saying that if you take the trades in the overall market direction, the win rate is going to be higher, and I mean much higher. So the reason why I did not take the entry from this fair value gap is because the imbalance is way too big, and if I have my entry around here, my stop loss would be very huge, right? So I would rather miss the trade than take this trade and risk 1% with a huge stop loss and a very low reward level. So you could have taken your entry from this auto block, okay? You could have put your stop here. You could have targeted this level. You would take some partials here, and then you take your whole trade, you take all the profits here. So let's see how this plays out. I'm actually not sure how this plays out because I just, okay, you took some partials here, you are break even now, and boom, this hit the take profit level. So what are the key things that we noted? So if the price before 9:15, if you see a liquidity level like this, equal highs or a significant high, or you know, any type of liquidity, guys, it doesn't matter, and then you see this huge displacement after liquidity sweep, you take your entry. Yeah, guys, it was a very, very excellent strategy, and I use this on daily basis with indices, of course. So I hope you guys like this lecture, and I'll see you guys in the next video.